Two of our large operating companies, Nuvo and Grasim, have only just announced that their boards have approved, and I think a press release has gone out to the exchange. A restructuring scheme, a significant restructuring scheme, and I'll take you through the highlights of that. My colleagues on the dais will then take you through the details. No one here really needs an introduction, but for the sake of good order, Pinky is CFO of Nuvo. Lalit is Managing Director of Nuvo. Sushil is the Group CFO. On my left, Dilip is MD of Grasim. And Ajay is the Business Director for the Financial Services business. So what has been approved by the boards of Nuvo and Grasim essentially is that Nuvo will merge into Grasim. And as a result of the restructuring plan, and it's fairly complex, so I'll leave that to Sushil to explain in more detail. The financial services business today under Nuvo will get listed with about 57% of its shareholding being held by the new Grasim, I'll call it new Grasim, and the balance being held by the shareholders of Grasim and Nuvo today. So Nuvo gets merged into Grasim. With it moves the 100% sub of, which is the ABFSL, which is the holdco of our financial services business. So the 100% sub of Grasim, which is ABFSL, moves along with, of Nuvo, moves along with Nuvo, becomes 100% sub therefore of Grasim-Nuvo. And as part of the scheme, the financial services business, the holding company of the financial services business gets listed with 57% of the shareholding with Grasim, new Grasim, and the balance with the shareholders of Grasim and Nuvo. So that's the overall construct of the structure. So just to talk very briefly about it, I believe this is really a play on the India growth story. So what you have coming through is a very interesting set of businesses. Some on the manufacturing space, some in the services space, some which are fast growing, others which are more stable and are throwing out cash. So it's a very good mix of businesses that really are, in a sense, a slice of India, a slice of what the Indian economy today is all about. So you have, for example, cement, you have visco-staple fiber, you have VFI from Nuvo that becomes part of the new Grasim, you have chemicals, which today is part of Grasim, you have fertilizers. On the services businesses side, you've got the financial services array, you've got Idea, both of which I think you know about. So a very interesting mix of businesses, strong play on the India growth story, an interesting mix of both mature and fast-growing businesses, some of which are generating cash and some others which are high-growth businesses. Important thing here, stable cash flow. So you've got a couple of businesses that are generating good cash flows on a regular, ongoing basis. For example, cement, VSF, VFI, chemicals, which is basically caustic soda. As a result of this, like I said, the construct of this restructuring exercise basically unlocks value for shareholders by listing the financial services holdco, which is a huge plus for both sets of shareholders involved in this transaction. It also simplifies group ownership. So, for example, both Nuvo and Grasim have shareholding in Hindalco, in ABFRL, and in Idea, and that comes together under Grasim new Grasim. So there is simplification of cross-holding that happens. Similar businesses come together. So, for example, VFI in Nuvo comes into Grasim along with the other textile business of Grasim, largely VSF and fabric. Caustic soda, you have caustic in both companies, in Nuvo and in Grasim, and they come together, though they are in different geographies, so there's a good fit. What does the new company, new Grasim, look like? So if you see the financials, obviously it's a much larger company which will have a much higher free float, much larger in terms of market cap. Just at a broad level, it's about 60,000 crores in revenue, EBITDA of about 11,000 crores and PAT of about 4,000 crores. So considerably larger in terms of just the sheer numbers. And like I said, what you see is a very interesting swath of businesses. 68% of revenue from manufacturing businesses, which essentially is cement, textiles, chemicals, insulators. Solar is only now just being incubated. 32% from service businesses, two large businesses on the services side, Idea and financial services. And if you look at the pie, if you look at the pie chart, about more than 70% of revenue actually comes from the three fastest growing businesses, which is financial services, telecom, and cement. And I believe that this share will keep going up, going out into the future. So making up a new blue chip, strong financially. Just to give you a sense, net debt to EBITDA of 0.6, less than 1, net debt to equity of 0.07, interest cover at a very solid 9 times. Businesses where we are deeply entrenched. So we've nurtured these businesses over many years. In most of these businesses, we have a strong leadership position, which is quite unusual for a conglomerate with such a host of businesses to be a market leader across almost every business. And like I said, an interesting mix of businesses, some that are more stable, more that have plateaued in terms of growth but are throwing up cash, others which are much faster growing. A large asset base and well capitalized and strong balance sheet. So that's a very sort of broad brush on the transaction, and I'm going to request Sushil to take us through the transaction and the rationale in some more detail.
Thank you, Mr. Birla. So what I'll do is I'll take you through a little detail of the transaction. So as you know, the Grasim currently has three different segments of the business. One is the cement business. They have a viscose pulp and fiber business and chemical business and part of the textile. And they also have certain investments in various group listed companies. If you look at Nuvo, which is a premier conglomerate having a largest financial services underneath, which is held through a 100% sub of Nuvo, which is called Aditya Financial Services. It also has a life insurance company which is directly held by Nuvo, and there are stake in payment bank, and there is a financial services business which is part of a division as a Nuvo. It has its own cash flow business like textile, rayon, insulator, chemical, and some of those other businesses. And it also has a investment in ABFRL, Hindalco, some of the group listed companies. Yeah. So if we, as Mr. Birla has explained, the first part of the transaction is where Nuvo kind of gets merged into Grasim, which will result into all the financial services company comes together. There is a consolidation of the financial services business, and there is a remaining pure play like Ultratech Cement, Idea Cellular, which gets consolidated, and some of the listed company shares in Hindalco and fashion company gets accumulated. And then there are businesses like textile, chemical, which is common in both the companies, gets kind of consolidated at one place. What also it does is when we are consolidating all the financial services business, by virtue of demerger, there is a listed the financial services company gets listed, where the shareholders of Grasim and Nuvo will hold around 17% by the promoter, 26% by the public, and 57% by Grasim, new Grasim on a consolidated basis. From a swap ratio, we had a Pricewaterhouse and Bansi S. Mehta who has did our valuation, and on that basis there is a free equity shares of Grasim. So just to explain, if someone is holding 100 shares of Nuvo, they'll get 30 shares of Grasim, and by demerging the financial services business, which will become a listed company, will also get seven shares against one shares of ABFSL, which will they will get on a post-Grasim situation. So eventually, the 100 shares of Nuvo will result into 30 shares of Grasim and 200 shares of financial services business. That's for the Nuvo shareholders. And for the Grasim shareholders, they'll continue to kind of hold 100 shares of Grasim, and they'll also get additional 700 shares of financial services business. That's what it comes for both the shareholders. Post-merger, Grasim, as I said, will have 5 different business lines. In each of these business lines, there is a leadership position. Financial services, we currently manage around $29 million AUM. We have 12 different business lines within financial services space. In our life insurance business and asset management business, we are fourth in the ranking of the business, and we have a fastest growing non-bank finance company in the country, where we have assets of around 30,000 crores. Telecom, as you know, we are third largest player in India. We also own 16% in world's largest tower company. Cement, as you know, we are largest in the country. Textile, we are a global player. We have a leading linen manufacturing businesses, and chemical business, again, we are the largest at the country level. Number, as Mr. Birla was explaining, at a revenue level, post-merger, we'll have a close to 9 billion kind of revenue, and we'll have a healthy EBITDA of around 12,000 crores. What is important to note that the EBITDA margin is around 19%. And for Grasim shareholders, we are actually getting high growth EBITDA business to Grasim shareholders. From a transaction point of view, we have Merrill Lynch, who is advisor on the transaction. We have 2 independent fairness opinion from JM Financial and Kotak Mahindra. JM was advising Grasim, and Kotak Mahindra was advising Nuvo. We had a joint independent valuer, as I said, Pricewaterhouse and Bansi S. Mehta. And from a legal point of view, we had a Khaitan & Company advising on the transaction, and Cyril Amarchand Mangaldas for financial services business. I'll request Ajay to kind of take you through on financial services business in a little more detail.
Good evening. Can you hear me at the back there? Okay, cool. So over the next few slides, I just thought I'll give you a sense of the financial services business. I have 3 or 4 slides to give you a sense of some of the individual businesses and some aggregate numbers. But let me first start with giving you a sense of what the new entity, demerged entity, will look like. So the shareholding, as you can see from the chart, shareholding would be 17% would be held by the promoters, 57% by Grasim itself, 26% by the public. That would be a holding in Aditya Birla Financial Services, which is the holding company for all of financial services. The businesses that sit underneath that holding company are some very diversified businesses. So you can see we have an NBFC, we have a life insurance company, we are a 51% holder in the payments bank, we have an asset management company, a housing finance company, a health insurance company, and then several other businesses, as you can see on the right-hand side of that box, broking business, an general insurance advisory business, a private equity business, and an online money management business. So I think what really makes ABFS quite unique in the market is the diversification that we have amongst in the businesses that we have. So we are a very diversified financial services company, and not just in terms of breadth, but I think if you look at the size that we've built in each of these businesses, we build scale across the platform, and that's what the right-hand side of the chart really talks about. We're amongst the top 5 fund managers in India. We manage just under 2 lakh crores of assets under management across our life insurance business, our asset management business, and our private equity business. Our lending book through our NBFC and our housing finance business is about 28,700 crores. We're amongst the top 10 diversified private NBFCs in the country. We're amongst the top 4 in both the life insurance space and the asset management space. We're the #1 online personal financial management company in India. And through the network and through the platform, we serve 8.8 million customers, have a nationwide presence with 1,350 points of presence, and working through 120,000 channel partners. So as I said at the beginning, I think this is really a very diversified financial services business which has built scale in each one of the businesses in which we operate. If I look at the next slide, I will just walk you through 4 key metrics that we think are quite important from a financial services standpoint. The first is assets under management, and if we look at the growth from 2011 to 2016, you can see we've grown over 2 times. We've more than doubled our assets under management in this period. So we ended last year with 1,84,000 crores of assets under management, and as I just mentioned to you, if I look at the June quarter, we're just under 2 lakh crores in that metric. Our lending book has grown very fast over this period, so it's grown 15 times from 2011 to 2016. Our revenues have grown about 1.5 times to 9,300 crores at the end of FY16, and our profitability grew to just under 1,000 crores in FY16. So as you can see across all the metrics, we've made considerable progress, built scale, built some materiality across the platform. If I just now walk you through a couple of our I'll walk you through 2 or 3 of our large businesses and give you a flavor of some of the other businesses that we have. So if you look at our NBFC, as I said earlier, we're amongst the top 10 diversified private NBFCs in India. We have a diversified portfolio. We operate in the loan against securities space. We operate in the loan against properties, lease rent discounting, home finance, SME finance, structured finance, really a diversified book across the NBFC. But I think what is more interesting is alongside the growth that we've seen in the past, I talked to you about the rapid growth in the NBFC, we've been able to maintain the credit quality in our book. So our net NPA as of FY16 was 0.22%, and if you look at the first quarter, it's 0.29%. So we've really been able to keep a very tight control on credit costs and the quality of the book. Our net worth as of June 30th was 3,823 crores under Indian GAAP. And all of you know that these businesses are valued typically at a multiple to book, so you can impute what the market multiples are. Typically market multiples are 3 to 3.5 times book, so you'll get a sense of what the NBFC could be worth. Our loan book, as I said, at the end of June 30th was about 26,300 crores. It's a AA plus rating for the NBFC. Moving to the asset management business, we are the 4th largest asset manager in India. As of the Q1 of FY17, our assets under management, average assets under management were 1,63,000 crores. We've been consistently outperforming the industry, gaining market share. So as you can see on the chart below in terms of market share, whether it's equity or debt, we've gained market share from FY11. FY11, our equity market share was 5.5%. FY16, our market share is 7.6%. In debt, our market share was 10.6% in FY11. Now we're talking about 11.7% market share in debt itself. Our asset management company has a multi-channel distribution, and it has top quality fund performance across all asset classes. Whether it's hybrid, equity or fixed income, we're amongst the top performers in the categories in which we operate. This business typically works as a percentage of AUM in terms of valuation. And typical transactions have happened between 5 to 7%. So again, you can impute what the value of this business might be. If I move on to our life insurance business, we are a top 4 private player in our life insurance business. Market share of about 8.4% in the first quarter of this year. We're number 1 in the group business where we have a 25% market share. So we're clearly large players in that segment. Again, we have multi-channel distribution. About 3/4 of our business comes from agency. The balance comes from third-party distribution, both brokers and banker. We have a diversified product portfolio across traditional products, par, non-par, and ULIP products. And our embedded value as of March 16 was 3,275 crores. We had a VNB margin of 15.2%. Again, these businesses are typically are valued as a multiple of EV. Recent transactions have happened anywhere between 2.5 to 3 times EV. So you'll get a sense of what this business could be worth. Some of the other businesses in the portfolio, newer businesses that are growing. Aditya Birla Housing Finance was only set up in October 2014. Today has a loan book of 2,432 crores in a fairly short period of time. A net worth of just under 300 crores. So again, this is a multiple of book valuation business. Aditya Birla Insurance Brokers is a general insurance broking business. Placed about 1,600 crores of premium last year. Has consistently gained market share. We have just under 2% market share in this business, which is a fairly fragmented business in the market. We have a private equity business, manage about 1,000 crores in private equity. We've just got approval from the regulators to launch our health insurance business, which will go live in the second half of this fiscal year. It's a joint venture with MMI of South Africa, one of the leading players in that market. We have a broking and wealth management business under the brand Aditya Birla Money. My Universe is actually a very interesting, exciting business we have in our fold. It's an online personal finance management portal. It basically allows customers to come on board, aggregate their financial information, get advice and transact. We have 2.7 million customers operating through this platform today, managing about 20,000 crores of their money on this platform. So really, opportunity for us to make a multi-product distribution platform through this, acquire a large number of customers and cross-sell across the platform. And last, I'll just mention the Payments Bank, which is a 51-49 joint venture between financial services and Idea. A great opportunity for us to use the telecom network to really distribute financial services products through the length and breadth of this country. Idea has an absolutely phenomenal network of retailers across the country and a very large subscriber base, 183 million subscribers. So if we're able to leverage that subscriber base and distribute financial services products to them, then I think we're talking about a very, very different opportunity compared to where we are today. I'll hand back to Sushil to conclude this presentation.
So as I said earlier, basically what we believe this transaction does is it's a win-win for both sets of shareholders, for Nuvo shareholders and Grasim shareholders. For Grasim shareholders, it gives them an exposure to two fast-growing sectors, which is financial services and telecom, which they didn't have this far. Several other businesses, for example, VFI, insulators, where we have a leadership position. These are businesses that we've nurtured over many years, businesses that we understand very well. So the long horizon of growth. For Nuvo shareholders, I believe two very strong businesses generating cash, cement and VFI. Large capitalization with better liquidity, that goes without saying. You also have access to the fund flow of two strong businesses, cement and VSF, to actually grow the financial services businesses, something that would have been difficult under the existing structure of being a subsidiary of Nuvo. Common benefits for both sets of shareholders. Like I said, the financial services business gets listed, and the shareholders of new Grasim, which means the shareholders of current Grasim and Nuvo, get shares directly in the listed FinCo. Clearly a benefit for both sets of shareholders. Simplifies group structures because both companies have shareholding today in some operating opcos of the group, Hindalco, ABFRL, Idea. All of those get consolidated. Similar businesses, like I said, under the broad umbrella of textiles. So VFI from Nuvo goes into Grasim, which also has textile and VSF, more importantly. Both businesses, both companies have caustic, which come together. And I think also very importantly, investors can decide whether they want to be invested in Grasim or in any of the opcos directly. So whether it's Idea or financial services, that's an option that a shareholder or an investor always has. So that is an overview. I think that's a fairly in-depth overview of the transaction that the boards have approved today. We'd be happy to take questions. I'll take the simpler ones and pass on the difficult ones.
Stock has been showing a lot of pressure. The shareholders are worried about the overall restructuring. Of course, you have explained that how financial services business will also be part of Grasim. What's the rationale behind turning this company into a large holding company of three big businesses, which is telecom, financial services, and cement was already there? And how will you also pacify the shareholders of Grasim when they ask you about telecom business? Because if they don't want any exposure to telecom as a business, which is going to be part of this restructuring, sir?
So just to pick up 2 points from that. Firstly, I think the stock has taken a beating because I don't think what was reported was the structure that you've actually announced. So the structures that were reported, as you would know, were all basis speculation. And I think the reaction has been, the reaction has been to what was reported in the press. Telecom, clearly it's one of the operating companies where this NewCo will have a fairly substantial stake. Having said that, it's a large company. It's raised very large finances in the last 10 years without any funding from the promoter. So to assume that this is being done to fund Idea, I think is a bit preposterous. Can I just finish? Yeah.
Mr. Birla.
And so I think Idea will have its own funding plan, as will ABFSG. And to assume that this is being done, like I said, to fuel idea is, I think, you're jumping the gun. That's not the intent as of now. Like I said, Grasim shareholders get exposure to new businesses, which are fast growing and linked in with the growth of the economy. So
Right.
you were saying?
Mr. Birla, you had the
In terms
option.
of, just a second, just to clarify, could you help us understand and take us through the exact debt contours of the merged entity? What will be the total debt that the merged entity will have?
Okay, I'm going to pass
And,
this on.
you know,
I'll pass this on to Sushil.
so, and Mr. Agarwal, if you could also clarify, there's been a lot of analysis, lot of speculation on what happens to the debt that Idea has and what is the exposure. I understand and I completely get Mr. Birla's point, but if you could clarify that, will you be taking on any portion of that debt? Will there be any exposure?
So currently, and I'll kind of tell you as of June, which we just announced the result today for both Grasim and Nuvo. Grasim in any case is a surplus company on a net basis. They have around 460 crores surplus cash on net basis, and Nuvo has around 2,000 crores kind of debt. On a combined basis, as we saw that, and Mr. Birla did explain that net debt to EBITDA would be around 0.5 or 0.6. So that's the level of leverage which we have. So I think on a combined basis there is no leverage at all, and balance sheet is very, very strong.
Okay, but in terms of, would there be any portion of exposure that fall into the cash flow?
So
Or
that's
into
what
the
I was trying to say. That there is no exposure to the debt of Idea that this new co will have. So I think that apprehension is completely ill-placed. Idea as a separate operating company will have its own financing plans.
Can we,
Mr. Also, it's the complex
Yeah,
structure
right,
that
yeah.
we are forming. Just one number on...
I want to understand the underlying scheme of the merger. Is it essentially simplifying the ownership structure? Is it value unlocking? Or also is it to give a boost to the financial?
Or also is it to give a boost to the financials of Idea? That is number one. You had two options. One is to merge the two companies and then demerge the financial services out of it. And you also had the option of demerging the financial services out of AB Nuvo and merge it. But you chose the former. Is there any particular reason why you did that?
Okay, I'm going to pass this on to Saurabh.
On the theme behind the merger, I mean, what
On the theme behind the merger, I mean, what is the inherent theme behind the merger?
So I thought the whole presentation was around that, no, Avi? Anyway, so
that.
Saurabh will take it.
If you look at different options which were there in front of us, you rightly mentioned we had an option of merging both and then demerging financial services versus actually demerging financial services and then merging rest of the entity into Grasim. If you look at what we have done, actually we have given exposure to Grasim shareholders as well to a fast-growing financial services business. So objective here has been to provide direct shareholding in financial services to both sets of shareholders, plus offer a high-growth business like financial services to both sets of shareholders. To add to that further, if we look at the track record of the growth for each of these individual companies, AB Nuvo has grown by more than, if you look at the numbers which were shown, has grown at more than 18% over past 3 years. If we look at the growth of Grasim on a consolidated basis, it has been less than 10%. So we believe the combined company offers a significant growth in addition to 3 strong businesses within its portfolio to both the sets of shareholders. would we be wrong to say that
Would we be wrong to say that you
I think the theme is that of value creation for both sets of shareholders. We keep looking for opportunities to create value, and we believe that this is something, like I said, which will be a win-win for both sets of shareholders. What it also does is simplifies group ownership, for example, but that really is a happy coincidence or a fallout of that. It's not driven by the need to do that.
And since it comes just weeks ahead of the rollout of RelGeo, are we to assume that you are also looking to beef up the financials of Idea in
So
a way?
I just said that that's not really a criteria at all. So I think that's something that you all have assumed. It just so happens that it coincides with the launch of Geo.
You clarified a very important
Another concern that shareholders or analysts have raised, analysts have raised, is that given the fact that most of AB Nuvo companies are not core to Grasim, what is the sense that it makes for Grasim? What are the synergies that there will be? I'm sure there would be some synergies that you would look at a later date. What are the synergies that the non-core Grasim companies can have? If you could outline the strategy there.
I think the biggest theme around is the Grasim shareholders are getting exposure to financial services business, which is a growing business. And they'll also get a direct listed shares. That's the biggest theme. And Grasim, if you look at in normal course at a standalone level, are relatively having a business which has a lesser growth in some form. And I did show some number, and Saurabh did kind of capture that, saying that if you look at the growth of both the companies on relative term, Nuvo has grown far better in a growth point of view.
Right, and 13% or 13 to 14% discount to the current market price is the valuation as per the swap ratio to AB Nuvo. So could you explain why this kind of a valuation, what really went behind the valuation?
So we had two independent valuers, Nisha, and this swap is actually based on the valuation done by them. So we had Bansi Mehta and Company and PwC, and we had two firms doing giving us a fairness opinion, Kotak and JM Financial.
All right, and it's a very complex structure, Mr. Birla. Is there any stamp duty impact that's going to be an expense?
So there will be some stamp duty impact, but very small given the overall size of the transaction. Nothing that's worth really, worrying about.
Yeah.
I don't know the exact number, but it's very small. It's insignificant.
There are synergies in a lot of companies. There are synergies in a lot of companies, like the chemicals and the other verticals that you have, which were anyways under one leader in the group, but were in two different entities. Now that it's going to combine as one merged entity, is there any CCI restrictions that we may, or hurdles that we may really...
So we will have to go to CCI for approval, as would be the case for any such transaction. But we don't anticipate any impediment there at all, because I think the addition that's happening is fairly is well within the limits that CCI would look at.
Are there any legalities that will be involved, sir, in terms of approvals? You've already stated the timeline, but in terms of approval, in terms of the legalities, what is the process, what is the step-by-step process that you're looking at?
I can't tell you a step-by-step process. Basically, it will be completed by the end of this financial year. It will involve, clearances from CCI, from the stock exchange. It will go to high courts, Gujarat and Madhya Pradesh, and you'll require approvals of the shareholders and creditors.
Mr. Birla, you've also said that there will be the financial services business will be listed. The financial services business will be listed. Can we have some sort of a timeline towards the listing of the...
So I think we said that we're about May, June of next year, of calendar year 17.
And how...
By when we expect it? Calendar year 17.
And how...
When we expect it to get listed.
And is there also a plan to get a financial investor on board when it comes to ABFSL?
So I don't... We can always draw on that possibility, but there is no plan as of now specifically to do that.
Activity happening in the financial services space, and since you pointed out that the entity is going to be listed soon, I'm just curious, would you be exploring any acquisitions before the listing in the financial services space?
Nothing specific that I can talk about just now, but if there is an interesting opportunity that adds value, then we definitely look at it.
So you're not ruling it out?
So going through acquisition is something that we've done in the past as well.
All right.
But nothing specific that we're looking at just now.
All right.
But nothing specific that we're looking at.
There are a lot of subsidiaries involved. One question arises, this is a capital allocation. Now, a lot of businesses are capital allocation. Now, a lot of businesses are fast growing. Idea is a separate listed company, it can raise resources on its own. But when we actually look in terms of financial services, in terms of cement, have you already identified what is the capital allocation priority within the group, which are going to be the sunrise sectors, and are actually in any way, which our Grasim shareholders would like to know, would you be using the cash flow to further enhance the prospects of Idea also, or you still think there's going to remain as independent, and also within the other group entities, how the capital allocation priority?
Like I just said, so I think this is not driven by Idea. Idea is a separate, large, a listed company. It's got its own financing plan. It has many sources of finance which it has drawn on in the past. It's done a QIP offering, it's got private equity, it's got a strategic investor. So I don't think we should get too focused or fussed about ideas. And I think that, each of these companies, you talked about capital allocation, have to have their own, they do have their own financing plans and their own growth plans. So also, the new Grasim will have to have its own, the board of the company will have to take allocation of capital decisions. Having said that, I do see funds going to fuel the financial services business, which I think requires the funding, and that's been one of the reasons for this major restructuring that we've announced.
But still, like, one of the concerns when this merger is now proposed, the shareholders would like to know is, like, which are the biggest top of these segments which you would be liking to actually focus on, where actually the money is going to be moving towards, and those sectors are going to be given a much larger trust.
You're saying for whom and what?
Grasim shareholders.
So I think it'll be their existing opcos, their existing operating businesses to start with. That would be, I guess that those would be the first port of call for capital allocation.
As I said that the company already is in normal course is a surplus cash company, and even with the merger, the debt to EBITDA is 0.5. So there is really no need for the debt at this stage. And given, as Mr. Birla was explaining, if there is any need as we go along, we'll kind of find a right capital structure for the company.
Right, and also, what's the total value of the financial services business as per the entire valuation?
Look, you guys can do the arithmetic. We have given you the numbers. We have different components of businesses. I see very few businesses out there which compare to our financial services in length and breadth of what we offer to public market investors. We have insurance, we have asset management company, we have NBFC, housing finance, and several other initiatives which are still taking shape and becoming bigger. Look, the history of the group, if we look at, to address a couple of other questions which have come up, if we look at, I think, the group, overall we have delivered shareholder returns, even in our holding companies, if you may want to call them, has been far superior to the Sensex returns in any time frame if you could look at. If you do your arithmetic, 1 year, 3 year, 5 year, 7 year, 10-year time frame, probably we have delivered returns, shareholder returns, which are more than 50% in excess of the Sensex returns, which itself shows the history of the group in terms of creating shareholder value overall and rewarding shareholders as we moved along.
Why don't you break it up for us? Enterprise value for the financial services business, for the merger. You could just give us help us with the numbers.
Look, the valuation has been done by independent valuers, so I'm not here to comment on that. But if we look at the ratios and different components of it, it's not that complicated to really value the financial services business. The metrics are very much out there. We have conveyed to you what the total size of assets under management are. We have given you the net worth of our NBFC business. We have given you the book size of our NBFC business. We have given you where our insurance business today is. You are aware of the benchmark which was set by when Sun Life bought a 24% stake from us very recently. If you look at other components, we have shared with you all the book values. It's a pure arithmetic. I think numbers for each of these segments are very well known. I would not want to guide the market towards any particular number. I think it's for the market and the analysts to do their own arithmetic. We are here to perform and take the business.
Just wanted to understand from you, since we're talking about the group and the rejig, there was a slide where you showed each of the businesses that you're going to be focusing on, be it financial services, textiles, telecom. What about fertilizer, sir? We've seen Tata Chemicals, for example, exiting the urea business. What's your focus? You intend to stay in this business? What's your own outlook there?
I think fertilizers in India, I think, is going through an interesting phase. And if you look at the government policies, especially on urea, after gas price cooling and the mentioned initiatives on DBT and so on, I think it's going to be an interesting space in the years to come. So at the moment, we are looking at it very positively. And if you look at the construct of our business, we are trying to focus also on non-urea components like chemicals and specialty fertilizers. So overall, I believe that it's still a very positive sector for us. And if the government really moves urea could be one of the sunrise sectors in the agri space.
You said at the moment, so how long are you, hoping things could?
I think it all depends on the government. If you look at the way the government has been functioning, we are short of urea. India is short of urea by about 8 million tons. And the government is trying to invest a lot of money, if you see, in the PSUs, which are non-functional at this stage. So the intent on the government's part is to give the urea sector a real push, and I think we will benefit through the policies in the coming days. So as we go along, we think or we look at urea positively or the agri sector positively.
Sure. Mr. Birla, this is...
Positively.
Sure. Mr. Birla, this is, you've created a diversified conglomerate in Grasim-Nuvo. But at the same time, it's a holding company of sorts for many businesses. And we know that stock markets always trade holding companies at a discount. Do you see that as a concern in some ways?
So it's not intended to be businesses of its own. In fact, more now than before. It does have significant stakes in some of the other operating companies of the group, but we're not intending it to be a holdco. So you've got now VSF, you've got cement, you've got VFI, chemicals. So all of these are fairly substantial operating businesses. So, the idea is to optimize each business as opposed to being we can't really do much about what's happening with the stock.
So if I look at the company as a whole, what is the percentage of revenues that will come? What is the percentage of revenues that will come from operations, and what is it that will come from the holding business that is there for the group?
Later with an answer. Later with an answer. Revert to you later. Don't have the number just now. Revert to you later.
But
what is the enterprise value of this total transaction in terms of the whole? The enterprise value of the entire transaction that's being announced today, and also with the telecom auction that's upcoming, what are your fundraising plans for IDEA? You talked about that IDEA has a fundraising plan, but will those fundraising plans be backed by Grasim?
So broadly, in terms of enterprise value, difficult to give you a number, but if you just do a broad math and add up the market cap of the two companies, Nuvo and Grasim, that would be broadly the EV of the transaction.
So with respect...
It's not really a conference for IDEA, so I'm going to give that question a pass.
So with respect to the Aditya Birla Financial Services Group, now that all the insurance businesses will be kept in one basket, would this mean possible IPO of Birla Sun Life sometime in the near future?
Firstly, I think what's going under Aditya Birla Financial Services is a host of businesses, not just insurance. BSLI is one of the businesses that will go in. Once we list the holdco, we don't really see an immediate need to create, listed companies underneath it. So at this point in time, at least there's no plan to do that.
Sajid here from Bloomberg Queen. You mentioned that the financial services will have a revenue of nearly 9,000 crores and earnings before tax of 995 crores. What is the profit for that entire financial services business? Can you give an idea of that?
That was the number for financial services.
EBT, earnings before tax. After tax?
So I don't have the number straight away, but I'll give you that number.
We have a payment bank license already, which is... Not really. So we have ABFS and IDEA as partners for the payment bank license. IDEA is not part of this transaction, so I don't think payments bank will be helped on account of this transaction happening. To a pretty independent.
Fair enough. And if you could just, Saurabh could take us through the dilution in independent holding companies once the merger is completed. The stake dilution in independent holding companies once the merger goes through.
What is an independent holding company?
From IDEA, or if you could take us, what is the dilution of the promoter shares in, say IDEA Cellular or any of the other firms?
Don't understand your question. Nothing to do with promoter shareholding in IDEA.
There won't be any dilution?
Promoter shareholding in IDEA?
Yeah.
Oh, no. There's no connect.
Because there was a concern that analysts had with respect to dilution.
No connect with this.
Okay, no funding. This is not aimed, this entire restructuring is not aimed at really funding idea, is what you said, Mr. Birla. But I'm also curious to know what are the funding options that you have for idea, what could be expected from there, if you could throw a little light on that.
So, Nisha, like I said, this is not a press conference for idea. You can always talk about it offline. Idea has its own financing plans, I'm sure.
But the times are challenging, you would say, and how does Aditya Birla Group look at?
Of course, it's very challenging. Yeah. Like I've always maintained, the next 2 years will be very tough, I think, in that sector.
Okay, a broader question then, if whoever could answer that. What is the broader 3-year time frame that you are saying? Mr. Birla said that financial services, that there will be additional funding required. Could you give us the plan in terms of expansion, in terms of growth that you're looking at for the financial services business once the merger is completed? If you could give us a roadmap for both the financial services business and the merged entity.
So I can give you a sense in the financial services business. I think if you look across the spectrum, each one of the businesses actually we see a lot of headroom to grow. Simply, if you look at India, huge growth in income, huge increase in income per individual, no penetration of financial products. As you reach more and more people, there's opportunity to grow. It's a direct play on GDP. If GDP continues to grow 7.5%, 8%, you should assume that financial services will grow 15 to 20%. And because our financial services are fairly complementary, so we're not really competing against each other, each business caters to a specific need. Therefore, we see each of them having a headroom to be able to grow, going forward. I think each one will have its own path to growth, and that will depend on the industry in which it operates. So it's difficult to give you a headline number as to what will happen. But I clearly see the growth being driven by the lending business. I think the NBFC, the housing finance business will drive growth. The asset management business, I think we're seeing a lot of traction from retail investors in the asset management space. That should contribute to growth. And the life insurance business is also turned. I think we've started to see growth coming back there. So that should be the third or fourth engine of growth. And then we have a number of new things coming up. So the housing finance business, the payment bank. I think all of that will contribute in addition to this, to further growth for the business.
Like the financial services business, which as you were explaining, it has a lot of avenues for growth. Within the group, cement is a very high cash generating business, more than 15% ROIC. So for the other segments, where are you actually identifying at present very strong opportunities? And where actually you would be deploying cash to actually increase it further?
So I think if you see that on a combined basis, we have been growing at a revenue level in double digit. And broadly, all of our businesses are kind of, that's a merged number, as a consolidated number. So broadly, most of these businesses are growing in double digits. That itself is a significant growth. And financial services, particularly as Ajay has articulated, that's the one of the largest growth engine for the company.
Vijay from ET now. If once again we could have a try. If we could ask you, sir, on the timing of... If we could ask you, sir, on the timing of this whole deal and the way it's structured, is it also to do with the timing to unlock the value of Aditya Birla Financial Services, the way internally it's panning out, and also the way the economy
that is one of the drivers. So it's reached a size and scale where I think it's an opportune time to monetize some of the value in a way that you can use the funding that comes about to grow the business further. So that is one of the driving factors for this transaction.
Just last question for the housekeeping purpose. So while the valuations would have been derived, as you were saying, with the independent advisors, while deriving the valuations, were the holding company discounts were also being kept in mind, and the intrinsic valuation was actually more being kept in mind?
So like I think someone explained earlier, the valuation was done by 2 independent valuers. Can't comment on what methodologies they use because we're not aware of that. I'm sure they know what they're doing. Thanks so much, and I hope that you will make amends for all the wrong reporting in the last 2 days and what is done to our stocks.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.